Imagine buying a cryptocurrency because everyone on YouTube said it was the next Bitcoin. You invest your savings, hold it for years, dream about becoming financially free, and one day you open your portfolio only to discover the coin is practically worthless. The developers have disappeared. The community is gone. Exchanges have delisted it. Nobody wants to buy it anymore. Sounds terrifying. The truth is, this has happened thousands of times. Since Bitcoin was created in 2009, more than 30,000 cryptocurrencies have been launched, yet only a tiny percentage have survived. So why do most altcoins die? Is crypto full of scams, or is something much deeper happening behind the scenes? Today, we're uncovering the reality that every crypto investor must understand before buying their next coin. Every bull market creates the same story. Prices begin rising. News headlines appear everywhere. Ordinary people start making life-changing money. Suddenly, everyone wants a piece of the action. Developers launch new coins almost every day. Influencers call every project the next Bitcoin. Investors stop asking questions because everything seems to go up. During the 2017 ICO boom, projects raised millions with nothing more than a website and a white paper. In 2021, thousands of meme coins appeared overnight. Today, AI, real-world assets, gaming, DePIN, and countless other narratives continue attracting new projects. The problem isn't creating a cryptocurrency. The real challenge is keeping it alive after the hype disappears. Before we go any further, let's answer one important question. What exactly is an altcoin? The word altcoin simply means alternative coin. Any cryptocurrency that isn't Bitcoin. Ethereum is an altcoin. Solana is an altcoin. Chainlink, Sui, Avalanche, Dogecoin, and thousands of others are all altcoins. But here's the mistake most beginners make. They think every altcoin has the same chance of success. That's like saying every startup will become Apple or Google. Some projects solve real problems, some build incredible technology, some create useful ecosystems, and some exist only because someone realized creating a token takes a few minutes and selling a dream is much easier than building a product. Let's travel back in time. In 2013, coins like Namecoin, Purecoin, Feathercoin, and Novacoin were considered revolutionary. Investors believed they would change the future of money. Fast forward a few years, and most people entering crypto today have never even heard of them. Then came the massive ICO boom of 2017. Coins like BitConnect, Walton Chain, Substratum, Dragon Chain, Lisk, Arc, Inem, Icon, and dozens more dominated YouTube, Twitter, and crypto news. Some survived in different forms. Many never recovered after the bear market. Then came 2021, where thousands of meme coins exploded overnight. For every project that survived, hundreds quietly disappeared. The lesson: popularity during a bull market doesn't guarantee survival. In crypto, today's superstar can become tomorrow's forgotten project. Nature has a simple rule: only the strongest survive. Crypto works in a surprisingly similar way. Thousands of projects compete for the same things: users, developers, investors, liquidity, partnerships, and attention. Every day, they're fighting to stay relevant. Some build amazing technology, but fail to attract users. Others build huge communities, but never develop useful products. Some simply run out of money before reaching their goals. This process is often called market selection. Over time, weak projects disappear while stronger ecosystems continue evolving. That's why crypto looks very different every few years. Every successful business solves a problem. Amazon made shopping easier. Netflix made entertainment more convenient. Google made finding information effortless. Now ask yourself this question whenever you see a new cryptocurrency. What problem does this project actually solve? If the answer is unclear, that's a warning sign. Many projects create a token first and search for a purpose later. Others simply copy existing blockchains with different colors and logos. If removing the token doesn't change the product, why should the token have long-term value? Utility creates demand. Without demand, hype eventually disappears. One of the biggest silent killers of altcoins is bad tokenomics. Imagine a project with 1 billion total tokens, but only 50 million are available to the public. The rest belong to founders, venture capital firms, and early investors. Everything looks great until the lockup period ends. Suddenly, hundreds of millions of new tokens enter the market. More supply means more people can sell. Even if the project keeps improving, heavy selling pressure can weigh on the price. That's why experienced investors always check token unlock schedules before buying. A great project with poor tokenomics can struggle for years. A blockchain isn't finished the day it launches. In fact, that's when the real work begins. Software needs updates, bugs need fixing, security vulnerabilities need patching, new features need to be added. If developers lose motivation, funding disappears, or the team breaks apart, progress slows to a crawl. Investors notice. Developers stop building applications. Users leave. Slowly, the project enters what many call a ghost chain, a blockchain that's technically alive but practically abandoned. In crypto, innovation never stops. If you stop improving, someone else will overtake you. Imagine spending millions to build the biggest shopping mall in the world, but nobody ever walks through the front door. That's exactly what happens to many blockchain projects. They have impressive websites, flashy animations, technical buzzwords, but almost nobody uses them. A blockchain without users is like a city without people. No developers build apps, no businesses integrate it, no one pays transaction fees, no real activity exists. Eventually, investors realize the excitement was bigger than the actual adoption. In crypto, users create value, not promises. Always ask yourself, are people actually using this network, or are they only talking about it? Crypto is one of the fastest moving industries on Earth. Today, your blockchain might be the fastest. Tomorrow, another project launches that's faster, cheaper, more secure, and easier for developers to use. Think about how many smart contract platforms exist today: Ethereum, Solana, Avalanche Sui, Aptos, Base, BNB Chain, Polygon, and many more. They're all competing for the same developers, users, and liquidity. If a project stops innovating for even a year, it can quickly fall behind. Technology doesn't wait, markets don't wait, competitors definitely don't wait. Crypto moves in cycles called narratives. One year, everyone talks about ICOs. Then DeFi takes over, then NFTs, then the metaverse, then meme coins, then AI, then real-world assets. Every narrative creates thousands of new projects trying to capture attention. Some genuinely innovate. Crypto moves in cycles called narratives. One year, everyone talks about ICOs, then DeFi takes over, then NFTs, then the metaverse, then meme coins, then AI, then real-world assets. Every narrative creates thousands of new projects trying to capture attention. Some genuinely innovate. Imagine owning a rare painting worth thousands of pounds, but nobody wants to buy it. Is it really worth thousands if you can't sell it? That's what happens when liquidity disappears. Many small cryptocurrencies have very few buyers and sellers. During a bull market, everyone is buying. During a bear market, everyone wants to sell, but there aren't enough buyers. Prices collapse. Exchanges notice the low trading activity and begin delisting the token. Once that happens, even more investors leave. Without liquidity, even a legitimate project can slowly fade into irrelevance. Let's destroy one of the biggest myths in crypto. This coin is only 1 penny. Imagine if it reaches Bitcoin's price. That's not how crypto works. The price of one coin means almost nothing by itself. What matters is market capitalization, which is the total value of all circulating coins combined. A project with trillions of tokens isn't suddenly going to become worth more than the largest companies in the world just because people hope it will. Low price doesn't automatically mean cheap. High price doesn't automatically mean expensive. Always look beyond the number you see on the exchange screen. Here's an important truth that many people misunderstand. Not every dead altcoin was a scam. Building successful technology is incredibly difficult. Sometimes a team has a brilliant idea, but runs out of funding. Sometimes regulations change. Sometimes a competitor launches a better product. Even if the project keeps improving, heavy selling pressure can weigh on the price. That's why experienced investors always check token unlock schedules before buying. A great project with poor tokenomics can struggle for years. Sometimes the market enters a brutal bear cycle, and investors disappear for years. Just like thousands of startups fail outside crypto, thousands of blockchain projects fail too. Failure doesn't always mean fraud, but as investors, it's our job to understand the difference between bad luck, bad execution, and outright deception. If most altcoins die, then why do a few survive? The answer is surprisingly simple. They never stopped building. Bitcoin survived because it remained the most secure and decentralized digital currency. Ethereum survived because it created an entire ecosystem for developers. Chainlink survived because it solved the Oracle problem that smart contracts couldn't solve on their own. Solana recovered after multiple setbacks because developers kept building applications and users kept returning. These projects weren't carried by hype forever. They survived because they created real value that people continued using year after year. Bull markets make everyone look like a genius. Even weak projects can see massive price increases when money is flowing into the market. But bear markets reveal the truth. Prices fall, funding becomes harder to find, communities become quiet, speculators disappear. This is where the strongest teams separate themselves from everyone else. Instead of posting rocket emojis every day, they continue writing code, fixing bugs, launching updates, and improving their products. History has shown that many of the projects leading the next bull market are often the ones that kept building during the previous bear market. Many beginners think, this project has famous venture capital investors, so it must be safe. Not necessarily. Venture capital funding can help projects hire developers and grow faster. But remember one important thing, venture capital firms are investors too. Their goal is usually to generate returns. When their locked tokens become available, some may choose to sell part of their holdings. That's why experienced investors always check token allocation, vesting schedules, and unlock dates. Big investors don't automatically guarantee a successful investment. Crypto is full of incredible marketing, beautiful websites, cinematic trailers, influencers, celebrity endorsements, massive conferences, expensive sponsorships. But marketing doesn't build technology. Some of the loudest projects disappear within a few years, while quieter projects slowly build strong communities and useful products. Always remember this simple rule. Don't invest because the marketing is impressive. Invest because the fundamentals are impressive. Most people don't buy altcoins after doing research. They buy because someone else made money. This is called FOMO, the fear of missing out. Social media makes it even worse. You see screenshots of huge profits. Influencers post luxury cars. Friends tell you about the coin that doubled overnight. Suddenly, your brain says, if I don't buy now, I'll miss my chance. That's exactly how emotional investing begins. Successful investors don't chase excitement. They chase information. Before buying any altcoin, ask yourself these questions. Does it solve a real problem? Is there an active development team? Are developers consistently updating the project? Is the community growing naturally? Are people actually using the network? Is the tokenomics fair? Are partnerships real and verifiable? Is the project generating meaningful activity instead of just social media hype? The more yes answers you have, the stronger the project may be. Research doesn't eliminate risk, but it can help you avoid many avoidable mistakes. Many people enter crypto searching for the next 1000x coin. But history shows something different. Most fortunes in crypto weren't built by buying random coins every week. They were built through patience, research, risk management, and understanding the technology. The dream of overnight wealth attracts millions. The discipline to study separates the few who stay in the market from the many who disappear with the next crash. Let's bust some common myths. Myth number 1, every altcoin will eventually recover to its previous all-time high. False. Many never do. Myth number 2, cheap coins are better investments. False. Price alone means nothing. Myth number 3, a huge community guarantees success. Not always. Communities can disappear if the product doesn't improve. Myth number 4, every blockchain needs its own token. Absolutely not. A token should have a clear purpose, not exist simply because it can. Meet Hassan and Omar. Hassan bought every trending coin he saw on social media. Every week, he chased a new hidden gem. Omar did something different. He spent hours reading documentation, studying tokenomics, understanding the team, and learning how each project worked before investing. 5 years later, Hassan owned a wallet full of abandoned projects. Omar didn't win every investment, but he avoided many of the biggest mistakes. The difference wasn't intelligence, it was discipline. Crypto isn't about finding the next miracle coin, it's about avoiding the thousands that won't survive. Every bull market creates new stars, every bear market creates new graveyards. The projects that survive are usually the ones that continue solving real problems long after the excitement fades. Before investing, ask yourself one question. Would this project still be valuable if nobody was talking about its price? If the answer is yes, you've probably found something worth researching further. Most altcoins don't die overnight. They slowly disappear because they stop building, stop attracting users, lose liquidity, or never solved a real problem in the first place. The crypto market rewards innovation, but it also punishes weak ideas. The next time someone tells you they've found the next Bitcoin, don't ask how high the price can go, ask what problem it solves, who's building it, and whether people are actually using it. Those questions could save you thousands of pounds and years of regret. If you enjoyed this deep dive, don't forget to like, subscribe, and join Blockwise for more videos that help you understand crypto beyond the hype. Question for the comments. What's one altcoin you believed had a bright future, but didn't live up to your expectations? And what lesson did it teach you?